Hey, 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 what's good, everybody? What's good? It's your man, J Life. We're back again. Let's do it. Let's do it. Happy to be back on the channel today. Go ahead and hit that subscribe or notify button there so you're notified of all the new videos that are popping out. 3 times a week, y'all. 3 times a week. 3 times the fun. We're going to have a good time here on the charts today. We're going to talk about candles and probability. Candles and probability. Every single candle tells a story. Every single candle tells a story. Sometimes it's hard for us to interpret it, but every single candle actually tells a story. It really does. So I'm going to talk today about engulfing candles. Engulfing candles. Not just any regular candle, but engulfing candles. An engulfing candle is a candle that starts where the previous candle ended and it actually engulfs it. So meaning this bearish engulfing candle here started right here and it closed down here, meaning it engulfed this entire candle. And so that's what we call an engulfing candle. Bearish, obviously, to the downside, bullish to the upside. This entire candle here closed up here, whereas it started down here, engulfed this guy right here. That's a bullish engulfing candle. All right, so let's get right into it. Bearish and bullish engulfing candles. So we're going to talk about it. Typically, a bullish engulfing candle is a good sign that the market's going to go up. See this right here? Bullish engulfing candle. Market pull back a little bit and continue to the upside. And then typically on the downside, a bearish engulfing candle typically is going to push the market lower. Now this is not always. Nothing is 100% in trading. It is just probability. The probability of it going down is high on a bearish, and the probability of it going up is high on a bullish. And so that's how we're going to try to take a look at the market today. Probability. I have a nice little tool here called a Fibonacci tool. You come over here, start from the top there. You're going to see this fib retracement. And it's going to measure the retracements of the market in percentages or in points. And we're going to take a look here and see if we can get this going here. So I'm going to show you some key points. So we have right here a bearish engulfing candle. So I'm going to use my Fibonacci tool here, start from the top because we're going down. The candle's going down, so we're going to start from the top, finish at the bottom. And here you'll see I have 25% at this line, 75% at the green line, 50% at the green line, and 75% at the yellow line, and of course the white line is 100%. Typically, after you get a bearish or bullish engulfing candle, if you put that candle in a Fibonacci there and see how far it pulls back, it's typically going to give you a good indication of how strong that movement is and if it's going to continue in that direction or not. So it's typically a 25% retracement like we got here. If it would have rejected here and kept going, that's a pretty strong indicator that the market wanted to continue down. 50%, I don't want to say normal, it's kind of like average, if you will. 50% could go either way, but typically 25 and 50% means the market's going to continue on the downside. And then 75, it's a deep retracement, especially on the very next candle. The very next candle is what I'm talking about right here. The very next candle, like in this case, it kept dropping, so this one wasn't relevant. But the very next candle, if it comes back up 75%, that's a pretty good indicator that the market's not ready to go down, or it may take some time for it to go down. Then obviously, if it comes back 100%, then and if it finishes at or above, then that would be another engulfing candle. If it finishes above or even at 100% retracement is usually a sign that the market's fighting or struggling or contending for that area. In that case, the market could continue sideways or it could push up. But typically, you just want to, I'm not telling you to take a trade based off of these percentages, but it's just kind of a good indicator. If you don't understand trend and all that, you just kind of want to gauge these candles and see. It's a pretty good indicator. In this case, we pushed up to the 25, kept going, hit the 50, spiked all the way up, touched the 75, spiked up again, came back down. We never dropped back below. Market was not ready to go back down. Market continued to push up, and we finally broke above. This is a case here where we had a bearish engulfing candle. The market went down for a little bit, but then eventually continued the upside and continued to push up. So that's why I said it's not 100%. It's just a good indicator, though. And I'll show you, especially if you use it with the trend. All right, it's just probability. All right, so I can use that on any candle. I mean, it doesn't really matter where it is. Obviously, every candle is not created equally, but sometimes if you use it in different places, you can get better results. Here's a perfect example here of a bullish engulfing candle. And you see the market came back down 25%, pushed up, hit 25% again, and ran away. These are 4-hour candles, by the way. So that's about a whole day and a half, maybe, almost, of the market going up. Definitely a full day after this touch right here. Big movement to the upside. Obviously, it came back with a what? A bearish engulfing candle and took all that momentum back. But guess what? Still didn't close below 100%. The market continued up. So that's what I was kind of explaining before. Even if it comes back here, wicks, if it doesn't close past the 100%, then it could continue in that direction. Not guaranteed, but it could. So as you're trading, you just kind of add that wrinkle to your repertoire, if you will. And there you go. And add that little wrinkle so you can kind of see ahead of time. It doesn't really matter which time frame you do it on. It works on any time frame. If you're a scalper or a swing trader, intraday, whatever, stocks, I mean commodities, doesn't matter what you're using it on. As long as there's candles, it's definitely relevant. Obviously, if you're in a trend, it works easier to see, I should say. Consolidation is not as easy to see. That's a good example right here. Actually, yeah, that actually bought up too. So after this bearish engulfing, we had a bullish engulfing candle right here. I'm gonna push it up. And it looks like we came back down. The very next candle here actually wicked almost 100%, but closed up here. The close is what matters the most, honestly. And then we wicked the 50, pushed up, wicked the 50 a couple more times, and then got out of there. Came back down, hit the 75, pushed up again, and then we finally closed below. But that doesn't necessarily mean the market's going to run down after that. As you guys saw, we came down, pushed right back up, closed up back up in here, broke below again, closed above this 75, and then continued to push the market up. And right now we're currently at the 50. So this is consolidation right here, actually. And so, not trying to hit a home run here, just a good indicator. What's the probability of the market going up? If it holds this 50%, very, very good. Just that simple. What's the probability of the market going up if it holds this 25%? Very, very, very good. What is the probability of the market going down if it breaks below 100%? Pretty good. Right here. And I don't mean like the trend change down or up. I just mean the current momentum or direction. We pushed down, wicked off the level, and pushed down a little bit further, and eventually came back. So when I say probability of it going in that direction, that's what I mean. All right, sweet. So let's dive in a little bit deeper. A little bit deeper here. I'm going to switch. I always like to keep my charts fresh. Let's switch it up to, let's go IUSD. All right, IUSD. Perfect. 4-hour chart. Actually, let's go to daily. Doesn't matter. Let's go daily. All right, on the daily chart, if I were to zoom out here, you guys can see we're currently in a downtrend. This is the top. Huge drop. Small pullback. Drop again. And we're kind of playing on that floor right now, if you will. And so understanding that, let's say I see the market where it is right now. It actually just is perfect. Perfect, perfect, perfect. Bullish engulfing candle right there. First candle wicked off the 25, pushed up. We closed a little lower, kind of hung out in this area, wicked off the 75, Worked off the 75, hung out here again. We're hanging out at the 75 right here. Telling you that, hey, market's not ready to necessarily go up yet, but we haven't lost 100%, so it's not ready to go down yet either. You can kind of use this as your guide. Do you take a trade if it breaks below here? No. Take a trade if it breaks above here? Not necessarily. It's just kind of just an indicator of where the market's going. And right now, as long as it's hanging out within this candle, it's going nowhere, honestly. Just bouncing back and forth between these zones, not really moving. We're waiting for the market to actually make a move. So you can even identify consolidation with this also. The market's stuck within that one bullish or bearish engulfing candle, and you know you're in consolidation. You can trade it as such, sell here, buy here, or you can wait for a move that you like and identify the direction clearly. All right, sweet. So I want to make sure you guys got that. I hope that's pretty clear to you. So that's bullish engulfing candle, and then you guys see we've got a bearish. So this is a good example here too. Sometimes you'll get that. You get a bullish, push the market up, bearish to push the market down. Now see, if we would have got anything besides a bearish right here, then maybe this market continues. But this was a clear sign to you. Hey, maybe the market's not ready to go up yet. So this one said, hey, yes, we're ready. This one said, hey, no, we're not. And this one said, no, we're not. This one said, hey, maybe. And right now we're still working on that. So that's why I said every single bullish or bearish candle is not the same as others. All right, let's take a look. So I want to make sure you guys got that. If you need the settings on that, you can click on that tool and come over here to the settings portion here. And then you can just type in these values. I have mine at 0, 50%, 75%, 25%, and 100%. 0.5, 0.25, 0.75, and 1, and 0. That's it. Just those 5 lines. You can manually input those. You can change the colors. You see here. When you start with this, I extend my lines to the right. Typically, if you don't, it's only going to show you the lines where the candle is. So I like to extend my lines right so I can see them well over here so they're clear and I can view my candles over here. And then the other thing you might want to take a look at is how it's set up. You can have a background if you like. I don't like the background because it kind of clouds my field of view, if you will. So I turn that off. And then I like my labels on the right. You can have them in the center. You can have them on the left. I like mine on the right. I like everything off to the right so my chart's pretty clean. Here's my levels here. You can have that in percentages. You can change that to values. I like percentages. And then my labels are on the top. You can have that same thing, middle, right on the lines, or even on the bottom. I like mine on the top. There we go. And you can change the font size and all that other stuff too here. Want to make sure you had that. That's called the Fib Retracement Tool. And it is third from the top over here on your menu bar. Sweet. All right, so let's go a little bit further. So probability. What is probability? When you're trading probability. You want to know what is the best chance for something to go in a particular direction. No one knows for sure. Anybody who tells you they know for sure, they're not telling the truth. No one knows for sure which direction the market's going to go, but there are probabilities of where the market's going to go. Typically, when you're in an uptrend, there's a good chance the market's going to go up. And you're in a downtrend, there's a good chance the market's going to go down. But inside of an uptrend or a downtrend, you're going to have pullbacks. So you never know. It's not going to go straight down. This market went down, pulled up right here. The probability of it continuing down was still great. It continued down, pulled back again. Probability still pretty good. We're in a downtrend. Market continues down. And then even look right here. Big push back to the upside. However, the probability of it going down was still great. Why? Because we were still in a downtrend. So when you're trading probabilities. What is most likely to happen? And when you use these candles in conjunction with that, what is most likely to happen if the market tests your 25 or 50%, it's most likely going to continue up. If it hits your 75 or 100, there's a chance it may consolidate or go the other direction. And then obviously if it goes past, there's a great chance it's going to go back down. Excellent chance it's going to go back down. And I can show you that too. So here we go right here. Here is a bullish engulfing candle to the upside. Market immediately pulled back to the 50. Dropped a little bit lower, wicked to 75, and then fell through here. This was a good indicator right there. Hey, the market's ready to go down. The probability of it going down was great. Obviously, we knew that because of the trend, but also this is a pretty good indicator off of a single candle. Off of a single candle. Same thing right here. We already did this one. Let's go to a different pair really quick. I want to touch on one more thing. All right, sweet. So this is the daily chart. Like I said, it doesn't really matter which chart. If you're a scalper, we can go down to the 15. 15, you just want to identify your trend. You want to make sure you're trending the right way. Currently, we're trending down. But even with a down trend here, as you guys can see, here's my bullish engulfing candle, right? Even in a down trend, if I'm not trying to hit a whole bunch of pips or hit a home run, look at this 50% retracement right there. Boom, give me a 50% retracement and push this market up for about 13 pips roughly. When you're scalping, I mean, sometimes that's all you need. You don't need 1,000 pips in a move. 15, 20 pips can make the money and pay the bills. So just keep that in mind. Great. We're going against the trend right here. We came out of consolidation, big move to the upside, retested it, gave you some pips there. Market fizzled out, consolidated, and eventually lost that level. And then here's where it gets real interesting. So we have a bullish engulfing candle here, right? That was a second one here. Then we have a bearish engulfing candle here. And I'll show you this right here really quick. So if you run into this situation, I'm going to show you how you can almost, might be hard to see for some of you guys there, but you can almost catch them in both directions. If you know how to read the market, you can catch it in both directions. Like I said, we're scalping right here. We're not trying to hit any home runs. We had this right here. It gave us this entry here. We took that entry. Then we had this right here. So we started to pay attention. And I'll actually take it out of here. Let's go to replay mode. So you guys can see it a little clearer. There we go. Perfect. So after the bullish, we had a bearish. And so after that bearish, even in the midst of the bullish, we can still use this for the bearish and read it correctly. I'm going to take this away for just 1 second so you guys can see it a little clearer. Boom, there we go. Bearish engulfing candle. Let's take that just a little bit lower. Perfect. All right, so I'm expecting a 50% retracement if I want to keep this thing going down. Obviously, right now we may continue up, and if it breaks this, then I can still use this one as a great indicator. Say, hey, we break this on the upside, we can continue up. So I would have double confirmation right here. This one here and this one, keep it going on the upside. So I'm just showing you how you can use them in conjunction with each other to really kind of help your cause. You're basically just trying to build an argument for which direction the market's going to go in. And then even conversely, I can use this too. My bullish here, my bearish here, see which one wins out. This one wins out. Hey, I know I'm going down, especially if it correlates off my 50. I don't want to take it too deep right there, but we'll keep it simple right now. All right, sweet. Here we go. So right here now, we'll play this market and we'll see what happens. I'm looking for, okay, I got a 25% retracement right there. If I'm a scalper, I like that. Maybe I take that trade immediately. Maybe I take that trade immediately if I'm scalping. And I caught 8 pips on that, almost 8 pips on that one. Market pulls back, gave me a 75% retracement, so maybe I'm rethinking it. Oh, look at that. And then I got a huge rejection off that level. Huge rejection off that level. Market closes below after, like it did right here. Hey, maybe this market's ready to go down. Maybe I take that scalp off the 75 or even off the 50 once it dropped there. Market continued down, popped back up, gave me a big drop. Playing off the 25 right now, off the 50, 25, 50, and eventually that market drops. We got all that just from this right here. This happened at 3 a.m., 3:15 in the morning. Most of us would probably sleep. But guess what? Over here, you get another opportunity at 8 a.m. You're awake. 9 a.m., 9:15, 9:45. When you woke up, you were able to identify this. Boom. Retest. Retest. Your 50 and your 25 gave you a great opportunity to sell this thing down, even after the bullish happened. And like I said, confirmation of that would have been, yeah, okay, I broke these levels. I understand it. Look at this. Once this happened, great indicator that market's going to continue down. So even if you weren't in the trade up here, you had another opportunity to come back in it if it came back in here. Or once this happened, your trade looked really, really good. Push you down further. I'll play a little further. Let's see. Came back to retest that 100 and pushed you down a little bit further. Went into consolidation. And then dropped it a little bit further. And you can kind of play these in conjunction too. Here's what I mean by that. Let's take a look. Let's get rid of that. And let's get rid of this too. So look at this. Bearish. Bullish fought back. Bearish. Bearish. Bullish fought back. Typically, if you can get 3 in a row, that's a really, really, really good sign that the market's going down. You can get 3 in a row, really, really good sign. Just keep that in mind. It was our first one. Never closed back above it. It was our second one. Didn't close back above it here. Our third one, we actually did close back above it. And then here's another one here. And the market melted. So don't forget to use that single candle Fibonacci to kind of determine probability of the trend. Like I said, it's not a guarantee of the movement. I'm sorry. It's not a guarantee by any means, but definitely a good chance that the market's going to go that way. All right, everybody, have a great one.